Hello and welcome back to Chapter 6 Notes. And so in this lecture video and then the subsequent ones for this chapter, we will talk about activity-based costing. So activity-based costing, as we see up here, I'm going to go over some high-level overview of activity-based costing, and then we'll do some problems related to activity-based costing. So it says right over here, activity-based costing is a costing method. So we're trying to figure out what is the total cost of making a product. And so what the whole point of activity-based costing is to assign materials, labor, and overhead to the products that we make. And it really focuses on allocating out those indirect costs, such as overhead and the other indirect costs that would not be considered manufacturing overhead. They would be indirect period costs. We would also allocate those out to the products that we make. So you look over here, and then this, of course, would be used for internal decision making because as we'll talk about more here, we don't just under ABC, activity-based costing, we don't just allocate out indirect product costs to the cost that we make. We also allocate out any indirect costs. So it could be indirect product or period. So in that case, it needs to be used for internal financial reporting rather than external, because with external financial reporting, you can only allocate out product costs to cost of goods sold into ending inventory. Okay. So we say over here how our costs assigned under ABC. The first thing is we're going to do some direct cost tracing. We're going to try to look back at our costs, our indirect costs, and say, all right, are there some indirect costs that we classified as indirect, but upon further inspection, maybe what we can do is really directly trace them. So the first thing we're going to try to do is to try to figure out, are there some costs that we can reclassify from indirect to direct, okay? Then the other thing is about costs assigned under ABC is that we can assign non-manufacturing, which would be period costs, and manufacturing, which would be product costs, to the products that we make. Some manufacturing costs could be excluded from product costs, and some non-manufacturing, such as period, would be included, and that's what I was just talking about there. We're also going to use multiple overhead cost pools. You know, what we talk about back in traditional way of allocating out overhead, if you think back to job order costing in Chapter 2, we calculate the overhead rate, then we multiply the overhead rate times the amount of allocation base actually used. That groups all overhead into one cost pool, and that the problem is that those costs are not really homogeneous, okay? It's also going to be difficult for many of those costs in the single overhead cost pool would not have a relationship with not have a relationship to a volume related allocation base. So that basically means is if we think about the setup costs for setting up a piece of equipment in order to make some products that we make, the setup costs for setting up the equipment would vary with the number of setups, not with direct labor hours. Okay, so direct labor hours is a volume related allocation base, but really the setup cost would vary with respect to the number of setups, not direct labor. So setup cost is not really the cost driver is not volume related for setup costs. Okay. The other thing is, so again, with ABC, we'll use multiple cost pools. We're going to use a lot of different allocation bases. Okay. The problem one of the issues with the traditional way of allocating out overhead is we group all the overhead costs into one cost pool, and we allocate it out using a volume-related allocation base, such as direct labor hours or machine hours or direct labor dollars. But again, as I talked about setup costs, not all costs vary with volume. Okay, so you're distorting the cost allocation by allocating out costs that don't vary with volume using a volume-related allocation base. That will distort the cost allocation. Okay. We say over here. Let me go over some more terms here. When we talk about a cost driver, a cost driver is an activity underlying the incurrence of a particular cost. So it's going to have a cause and effect relationship with the amount of costs incurred. So we think about an internal IT help desk. What would be the cost driver for an internal IT help desk? I would say number of help desk tickets. The more help desk tickets that IT help desk has, the more cost that they will also have to service those IT help desk tickets. So that would be the cost driver, in my opinion, number of help desk tickets for a help desk. Okay. Also, some more information over here, some more overview about ABC. ABC systems calculate the cost of individual activities and assign those costs to the cost objects, such as products or services, on the basis of the activities needed. So basically what this is saying is we're going to go through and we're going to calculate the rate for each overhead cost pool. And then we're going to multiply that rate times the amount of allocation base used. Very similar computations as what we did back in chapters 2 and 3 with allocating or applying manufacturing overhead. Okay? The actual computations are pretty similar. All right? So when we look over here about some steps for implementing ABC, often think about the Bobs from Office Space. Have you ever seen that movie? And one of the things is they bring in the consultants, the Bobs, and the Bobs meet with with the tech workers, and they're saying, what do you do here? What are the things that you do? And what they're trying to do is identify major activities in that corporation in order to save on costs. Right? That's what they're trying to do in the movie. And activity-based costing is kind of similar. We would sit down as an activity-based costing consultant. We would identify some major activities, and we could define a major activity as some event, task, or unit of work that has a specific purpose. So we could say fulfilling purchase orders, or fulfilling IT, or fulfilling or completing IT help desk tickets, okay, or designing products, or what we could say is even setting up equipment. Those are all tasks, okay, and so what we want to do is identify those major tasks in the company, okay. Some of those tasks or some of those activities could be related to production volume, but not all of them do, and this would be accomplished through interviews using a cross-functional team, so for folks from accounting and from some of the other business domains as well. Okay, we would group the costs of these activities. So we identified the activities, and then we're going to group the costs of those activities into a cost pool, and then we're going to identify the cost driver in each cost pool, which would also be known as an activity measure, and then we'll relate the cost to those products using the cost drivers. We're going to focus in this chapter with our computations on step 4. Okay. So if we went through and we did some interviews and we identified some of the major activities in the production process as processing purchase orders for materials and parts. So this is one of the major activities. We get this through interviews. And then we say, what are the associated costs with fulfilling purchase orders? We say, well, we have labor costs for workers determining the order quantities, contacting vendors, and preparing those POs. What would be the cost driver? The number of purchase orders. So the more purchase orders that we have, the higher the cost over here. Okay, that's that cause and effect relationship that I was talking about earlier. If we look over here, we have another major activity that we've identified of setting up equipment. Again, these are examples. What are the costs associated with setting up equipment? The labor costs for workers who are involved in the setup. And then we have some depreciation on equipment that we actually use to help us set up this equipment. So we have equipment that we would use to help us set up other equipment. Okay, what would be the cost drivers and number of setups? Okay, so you can see number of setups does not vary with volume. It doesn't say the more products that you make, the more setup costs you have. It's actually more related to the setup costs over here is more related to the number of setups. The more setups that you have, the more you have to pay workers to set up the equipment. Okay, and the problem is that you may have to set up the equipment if you want to make just one order of the product or 50 orders of the product. You still have to incur the same setup cost. Okay? So activity-based costing identifies several levels of activity. We have unit level activity, batch level, product level, customer level, and organization sustaining. So we have unit level activities. These activities are performed each time a unit is produced. The cost of units should be proportional to the units produced. So this would be a volume-related allocation base, right? For example, providing power to run processing equipment would be a unit level of activity since the power tends to be consumed in proportion to the number of units produced. So each time we make these units, we're going to incur the power to run the processing equipment. So that power to run the processing equipment we would define as a unit level of activity, and we would probably allocate that out using a volume-related allocation base. The more units that we produce, the more power that we use. Okay. We also have batch level activities. These would be activities that are performed each time we batch. So we may actually have groups of products that we make. That would be considered a batch. Okay. Some examples would be placing purchase orders. Setting up equipment would be an example of a batch level activity. Okay, so if we need to make 50 products or one product, we still have to set up the equipment. So it's for that batch of products that we have to make. That's the cost driver. Okay, it's a batch level activity. Product level activities would be activities that relate to specific products and must be carried out regardless of how many batches are run or units of product are produced or sold. Some examples would be advertising, so it's specific to that product. Maintaining a product manager, or we could say designing a product. You know, whether or not we're going to make one product or 50 products, we still have to design the product. Okay? Customer level activities are related to specific customers. So dealing with customers, that would be a customer level activity. So examples include sales calls, catalog mailings, relationship management costs, call center support. Those would all be examples of customer level activities. And then the last one that we have over here are organization sustaining activities. These are activities that would be carried out regardless of how many customers are served, how many products we make, how many batches we run. So basically just overall costs that we would incur regardless of what we're doing in the company, basically. So regardless of whether or not we make one product or 50 products or one batch or 50 batches, or one product, or we're designing one product or 50 products, we still have to heat the factory. We still have to heat corporate headquarters. We still have to pay the CEO. Okay? These would be examples of organization sustaining activities. Cleaning the executive offices, providing computer support. Okay? The cost of preparing annual reports to shareholders. Sometimes we may not allocate these costs because there's no cause and effect. You're going to incur them regardless of whether or not you make the products, or you design the products, or you have the batches, or you have customers, you don't have customers, you still have all these costs. So does it make sense to allocate them because it's difficult to think about that cause and effect relationships. Difficult to establish that cause and effect relationship. So in that case, it may not make any sense to allocate them. Okay? So we say over here, our example problem. So this would be relating to step 4 of our activity-based costing steps when we're going to relate the cost pools to the cost drivers. So basically calculate out the cost. So we look over here. It says Power Electronics manufactures portable supply units. Okay, Power has recently decided to use an activity-based approach to cost its products. Production line setups is a major activity. Remember, this would be a batch level activity. Next year, the number of setups is batch level. Next year, Power expects to perform 1,000 setups at a total cost of $1.5 million. So the first thing we're going to do is calculate out what's the setup cost what is the cost for each setup, cost per setup. So you take the total cost divided by our 1,000, which gives us our $1,500 per setup. So each setup costs us $1,500. And then we come over here, it says Power plans to make 750 units, which requires 2 setups. So this is done in batches, right? There's 2 setups to remake 750 units. So it's going to be done in batches. So what's the total setup cost that would be applied to product EP150? Well, we come over here and go 2 setups times the 1,500 gives us $3,000 of total setup cost. Now the final question is we're going to take that setup cost and push it down to the unit level. What would be the cost per unit? Well, if it's $3,000 for making 750 units, we could come over here, right? And then that's going to give us our $4 per unit. Okay? All right, this ends this lecture video, and the next ones will continue on with activity-based costing. Thank you.